Good morning everyone and welcome back to my YouTube channel. So this is Smart Trader. I'm back with a new video. So in today's video we're going to discuss about how to make your proper technical analysis. So this video is a follow-up of our previous video in which we have discussed about the steps that you should follow to build a proper trading plan. So in today's video we're going to focus on the first step, which is the technical analysis. So how can you make your proper technical analysis as a smart money concept trader? So without further ado, let's get started. So when it's come to your technical analysis, the first thing you need to identify is your trading style. I know this might sound very basic, but it is very important to know your trading style because it will help you to identify your proper time frame combination, because some time frames work the best together. So you need to identify your trading style so that you also can identify your time frame combination. So there are four main trading styles in trading. So we have the institutional traders, we have the swing traders, we have the day traders, and the scalpers. So as we are all day traders, the best time frame combination is the 4 hour, the 15 minutes, and the 1 minute as our lower time frame confirmation. Today we are not going to cover the 1 minute time frame because this one is our lower time frame confirmation. So we'll only stay with the 4 hour and the 15-minute combination. So here we are in the 4 hour time frame. So as a day trader, we're not going to use the 4 hour as our main time frame, but we'll only use it as an additional confirmation, as a confluence for our 15 minutes. So whenever you open up your chart like this and you want to start making your structure mapping, the first thing you need to identify is just to visually identify your lower lows, lower highs, so that you can identify the pro trend of the market. Okay, so as you take a closer look at this structure here, you see that the market keep clearly making lower lows and lower highs. Okay, we have lower lows here, this is a low and another lower low, lower high, lower low, lower high, and lower low, and so on. So you can visually see that the market is probably bearish here. So we need to identify our breakup structures and the valid structures to confirm that this trend here is a bearish trend. So the first thing you need to do when we want to confirm our trend here is to identify the lowest point of the market. As we are in a bearish trend here, so we need to identify the lowest point of the market. If it was a bullish market, then we would need to identify our highest point. Okay, after visually identifying our higher highs and higher lows like this, then we will need to identify to mark our highest point, which is here. So this will be the beginning of our structure mapping. So this is our lowest point, which is here. Let me mark it for you. So we're going to start our structure mapping from this point here. So after identifying our lowest point here, the things that we need to identify is just to identify two consecutive break of structures so that it can help us to confirm that the market is keeping the current bearish trend. Okay, so if we can identify two consecutive break of structures on the left side of this lowest point here, then it means that this market keep being bearish here. But if you also identify a change of character, that means that the market is changing this bearish structure here to the bullish. Okay, so after marking our lowest point here, we need to identify our inducement. First thing we need to identify is the inducement. So the inducement is the first valid pullback that you meet on the left side here. So over here we don't have any inducement here, so our first valid inducement is this point high above here. And after the market take out this inducement, then this lowest point here is a valid one. So if the market drop to break this level here, then this will be a break of structure. This one here is not yet a valid break of structure, so we need to identify the previous break of structures. And as you can see here, we have another inducement here which was taken by this pullback. So this point down here is also a break of structure. So we have our first valid break of structure here. Again, we have another break of structure. Let me mark it. So this one here is like a break of structure, but if you take a close look here, there is no inducement swipe here. So this lower low here is not the valid lower low here. So we need to go backward again and see what we have here. So this is our possible break of structure. So we need to identify the inducement. So in this leg here, we also have a valid inducement which was taken here. So this break of structure down here is a valid break of structure, and this one here is just an internal structure. Okay, so the market has made a structure like this. Okay, and again keep pushing down like this. So we have now identified two consecutive break of structures. It means that the market is in the bullish, the bearish trend. Okay, but if you take a closer look again at this level here, you can see that the market has actually shifted the structure here because it failed to come down to break this structure and keep the bearish trend over here. So now the market has shifted from bearish to bullish, so this is our bullish structure here. So now we will be looking for the buy opportunities in this leg here. So we'll need to use bar replay to come back a little bit, maybe at this level here, to use the time frame combination so that you guys can properly understand. Okay, so let's say the market was at this level here and there was not yet this change of character. Okay, so at this point here the market is still bearish, as the market has not yet changed character here. The market need to push high to break this level here before it will be a change of character. So at this point we will need to drop to our lower time frame, which is the 15-minute time frame, and we can start looking for buy opportunities in this internal structure in the 4-hour. We will just look for buy opportunities whenever the market can mitigate an order block or take out an inducement. Then we can look for buy opportunities until the market mitigate or take out this inducement. Then we will start looking for sell opportunities, because in our higher time frame the market has swept liquidity here, so there is a possibility that the market can make a small reaction to the downside. And in the lower time frame, in the 15-minute, we can have a change of character confirmation here. And moreover, the 15-minute is the lower time frame confirmation of 4 hours. So that's why I said the best combination for a day trader is the 4-hour and the 15-minute. Okay, so at this point here, if the market swipe liquidity, swipe this inducement, then in our 15-minute we will start looking for sell opportunities over here. But if the market fail to keep pushing down and break nearest structure here and push a little bit high here, then at this point now the higher time frame, which is the 4-hour, has changed structure here. So we will keep looking for buy opportunities in our 15-minute time frame as well. So here we are in our 15-minute structure. So we will look for buy opportunities in this leg until the market push higher in our higher time frame and mitigate or take out our inducement in the 4-hour. Okay, so down here we have, well, we can clearly see that the market has also shifted the structure in the 15-minute time frame. So we have inducement here and break of structure here. Okay, and the market push high, take out inducement, and this is a change of character here. Okay, so after changing character here, the market keep pushing high, and we can see the market has made a small pullback here to take out this inducement, but there was no valid order block mitigated here, so we have to wait for another structure. So let's wait and see what the market have done here. Okay, as you can see, the market has pushed high to break the structure in the 15-minute time frame, and now we can wait for the market to take out a valid inducement, which is here. This will be an inducement, and let's mark our valid POI so that we can buy if the market come to mitigate this POI. But you can see that in this leg here there is no valid POI over here. Okay, and this one here is our higher low. So if the market push down and break this structure, it means that the market will definitely go down in the 15-minute, and also in the 4-hour the market will probably keep pushing down to break this internal structure here. Okay, so as there is no valid order block in this leg here, we will only use the liquidity swipe and single candle order block as our confirmation. So the first leg here is our inducement, this one here is our liquidity, and also here this is a liquidity. So if the market drop, swipe liquidity over here and create a single candle order block, then we can definitely take a buy based on this structure here. And if the market has failed to swipe liquidity here and completely push down, then we can also wait for the market to swipe this liquidity or this one down here, then we can take a buy. So let's wait and see what the market have done. So you can actually see here that the market has pushed down to swipe this liquidity, but it didn't create any single candle order block here. And you can see that this is a massive bearish candle here, so there is no confirmation here. So we have to wait for the market to create a single candle order block before we can planning for a buy here. All right, you can see that the market has failed to swipe liquidity here. It has made a small swipe here and make a small pullback to trap traders and then keep pushing down here. And the market has targeted this second area of liquidity, which is here. And you can see that the market has actually swiped this liquidity and created a valid single candle order block, which is here. So this red candle that has swiped this liquidity here is our single candle order block, because the next candle has closed above it. Okay, so at this point here we can pen our bar limit here. So I cannot use the time frame confirmation because I'll cover it in our upcoming videos. So today I just want us to focus on our structure mapping, which is the part of our technical analysis. Okay, so I'll target the 1:3 risk reward ratio, which is here. Okay, so let's wait and see what the market has done. You can see that the market has come to trigger this buy limit here and push to take out the profit over here. Okay, so this is how you can catch a trade even though there is no valid order block in this leg here. We can use the single kind of order block confirmation and this liquidity swipe to take a trade here. So this is a new breakout structure. So at this point, we will need to wait for the market to come down, take out inducement. If the market push down and break this level here, this will be a change of character in our 15 minutes. Okay, so here the market has shifted the structure. The market has created a new structure here. So our inducement is transferred from here to this one here. And this area here is not a valid breakout structure because it didn't take out any inducement down here. So let's wait and see what the market have done next. If the market create any single kind of order block here or come down to take out this liquidity here, then we can also take a buy here. So we will keep looking for buy opportunities like this until the market reach our 4-hour inducement, which is here. So if the market reach this level, then we can switch back to our 4-hour to see if the market has just swept liquidity or break this structure here. Then we can also look for other opportunities in our 15 minutes. Okay, so let's move back to the 4-hour and see what will happen here. Here we are in the 4-hour. You can see that the market keep making pushing higher high like this until the market has reached our inducement in the 4-hour. Okay, so at this point here, we cannot look for buy opportunities in the 15 minute anymore because the market has swept an inducement in the 4-hour. So here we can directly take a buy based on the single candle order block in the 4-hour here. So this is a swipe of liquidity and the market has the next candle has closed below this candle here. So this is a valid single candle order block. Okay, so and the market, you can see the market has come back to mitigate this single candle order block, and we will always target the 1-3 risk reward ratio. So this is the first scenario after the market has swiped the liquidity of this inducement here. So we can stay in the 4-hour and then take our sell based on the single candle order block confirmation, or we can also drop to the 15 minute and look for lower time frame confirmation. And as I always told you, whenever the market make a single candle, the market creates a single candle order block in a higher time frame. That means that in the entry time frame, this one here is a change of character. It is a lower time frame confirmation. Now that we are in the 4-hour, that means that our lower time frame confirmation is the 15 minute. Okay, so whenever the market creates a single candle order block in the 4-hour, it means that in the 15 minutes the market has already changed structure as a lower time frame confirmation. Okay, so let's come back here. You can actually see that this is our 4-hour single candle order block, and it is very huge here. And you can actually see that this is our structure in the 15 minute, and this is the change of character which is here. And you can also see that the market has already swiped liquidity over here, so we will not need inducement before taking our trade here. And this one is our valid order block, and our risk reward ratio will also be 1-3. So the advantage here of using the lower time frame confirmation is that you will reduce your stop loss size, and you can increase your risk reward ratio. Okay, so this is the advantage of using lower time frame confirmation as well. And we can keep repeating the same thing until the market break a new structure or the market change completely character over here. So let me get rid of the bar replay mode so that we can see what happened here. And we can actually see that the market has pushed high to change character in our 4-hour here. Okay, so when the market has changed character in the 4-hour, you can actually see that the market is making a small pullback down here. So the market is on its way to take out this inducement down here or mitigate an order block down before moving to the upside here, and we can start looking for buy opportunities. So when the market will be coming down here to take out this inducement or mitigate a valid order block here, then we can also switch to our 15-minute time frame to look for sell opportunities here until the market has reached our inducement here or our valid order block. And then after the market has reached our valid order block, then we can use the 15-minute time frame as our lower time frame confirmation, or we can directly take our buy in the higher time frame using the single candle order block confirmation. And after we have that confirmation, then we will now start looking for buy opportunities in the 15-minute time frame until the market break the structure, this new structure over here. So this is the best combination, the best time frame combination ever for a day trader, the 4 hour and the 15 minute. We can also use the 1 minute, but I'm not going to cover it today because this is part of the lower time frame confirmation, the entry module. So I'll cover it in the upcoming video. So in the next video, we're going to discuss about the area of interests and the lower time frame entry confirmation. So thank you for watching this far, and see you next time.